Welcome to my YouTube channel. My name is Jeremy and I'm a swing trader. So in today's video, I'll be talking about how to do a proper top-down analysis on some pairs. So if you are new to the channel, please subscribe and like so that it will encourage me to start making more videos like this. So first thing first, if you wanted to start your analysis, you will have to go to the monthly time frame to see the overall direction of the market, to see where price is heading to. And on this pair, I'm currently on US30 at the moment. So on this pair, price was trending to the upside. So I already identified the overall direction of the market on the monthly time frame. Then we come to the weekly time frame to plot your key levels. As you can see, I've already plotted my key levels. So basically, if you wanted to plot your key levels are so easy to spot on price. You just have to look left, look at the area that where price has reacted from, areas where price move away from significantly, and areas that has multiple touches. So I'm not going to dive deep into that. So on this pair, price was trending to the upside, and then I bring out this my trend line. As you can see, I draw it from the bottom like this, and for a trend line to be valid, a trend line needs a minimum of 2 touches to be valid. So this is the first touch and this is the second touch here, and the third touch of the trend line is the one that you'll be using for a trade entry. So I draw my trend line based on the trend of this market. So price was creating higher high, higher low, but when price got to this region, as you can see, price tap into this support level, this demand level, and also this trend line. So this was a high probability trade, if you ask me. So I took the trade. Give me a second. So price was trending to the upside, creating higher highs and higher low, and this was a though this was supposed to be an higher low. So I was expecting price to stop maybe at this region, then start heading higher to create a higher low, but price came lower to create an double bottom, to create a equal low. So as you can see right here, this was an equal low. So this was a low that price created, and also price came down to the low, then tap it before heading higher. So I already know that the overall direction of this market is to the upside, so I was only looking for buying opportunities. So price getting into this trend line and the support level was enough for me to get into this trade. Then however, you can't just get into a trade just because of others. You need other confirmation. Like before getting into a trade, you need to have at least 3 confirmation before you can enter a trade. So if after starting your analysis from the monthly time frame, then you work your way down to the weekly time frame to plot your key levels. And so the key levels are the areas where that's going to be guiding price, and area where price will go to and then start reacting from, either moving to the downside or moving to the upside. So I was expecting price to get to some certain ridge, so support level, and some people might even call it an area of interest or point of interest, whatever. So I was expecting price to come into an area like this before I start looking for buying opportunities for the trend to continue. So on the 4 hour time frame is when I entered the trade, and I entered the trade just with candlestick confirmation, so I can see a bounce of this region. So this was the area when price come back down to this trend line area. So there was enough buying pressure coming into the market, and also at this support level. So after seeing this huge candlestick, this bullish engulfing candlestick, as you can see, it engulfs all these 1 2 3 candlesticks. So this was enough signals to show that buyers are enough in this market. So after seeing this bullish engulfing candlestick, so that's when I decided to enter the trade. Then my next level target is this high at the daily time frame. So this was the high that was created at this. So, and the reason why I map out this high is because when price go to this area, price move away from it significantly, start forming all these red candles. So this was an supply level at this region. There was a supply level at this region. So I know that if price still come back down into this region, then price will still Price might still get rejected from the level, and as you can see, that's what happened when price tap into the supply area again. As you can see, price start dropping. So that's what is causing the drop on US30 at the moment. But what I wanted to speak about is this trend. It seems like it's getting weak. Firstly, price was coming down, so price was expected to create a higher low, then start creating higher high. So this was the higher high. Then I was expecting price to come to maybe somewhere around there to create a higher low and start heading higher. But that does not happen. Price came back down to create an equal low. So this low is still equal to this previous low. So this was an equal low. And also when price go to this region, price was supposed to create a higher high. So this high needs to be higher than this previous high. So I think what I'm thinking is that maybe this trend is getting weaker. So price might wanted to break lower, maybe come back down to touch this trend line. However, there was a Fibonacci. So the Fibonacci is a retracement tool that you use to know when a retracement is over in the market and what price is likely to do. So as what I can see, after this impulsive move to the upside, when price starts tracing, then I bring out my Fibonacci tool. So after drawing it like this, I see that price was approaching this Fibonacci retracement level. So this 61.8 and this 50% Fibonacci retracement level are the areas that you'll be using to know when a retracement is done. When a retracement is done and when an impulsive move wanted to start. So, and also the Fibonacci level is also lining up with this support level, this key level at this region, as you can see. And I map out this key level because price touches multiple times. So this was the first touch, this was the second one, and this is the third one. So that's why I draw the key levels out. And as you can see, the Fibonacci zone was still inside this then key level. So I was expecting price to got into the zone. So I will be looking for candlesticks confirmation. If I can get one, maybe I can start looking for buying opportunities here. But however, price can still break lower because the reason why I say that is that price is forming this huge candlestick on the daily time frame. This was the daily candlestick, as you can see. This was a bearish and government candlesticks. So and it was forming around this region. So I can't really say if price was still going to respect this zone and head higher. Price might wanted to come and tank into this trend line area or even break lower. So for now, just be waiting for price to get into this key level. Then I will be looking for buying opportunities when price got here. So when you are trading, after doing your analysis, after knowing when price is going to head and all that, you still need to put in a contingency plan. Like if the trade doesn't goes in your favor, or if all that doesn't happen, so you still need another plan. You can't just be focused on one direction. So now on this particular trade, I'm a bit, maybe let me just say I'm on 60% to the upside and let's say 40% to the downside because I'm seeing this huge candlestick forming around this region. So price might break lower and then price might break this key level then start heading lower. However, if I see a candlestick formation at this region, maybe some bullish candlestick, and if I see how price is reacting to this level, then I might be looking for buying opportunities based on this key level, these major key levels here, and also the Fibonacci retracement too. And also one thing is that the Fibonacci retracement level, if price got into the region and also if there was maybe a key support or a resistance level at that region, price is most likely to respect it. So because those trading with the Fibonacci 2 will be looking to get in at the region, and those that are trading is support and maybe supply and demand or support and resistance, they will also be looking to enter a trade at this region. So that's why I'm saying price might respect this region and start heading higher. But if that does not happen, price can still break lower and then keeps going lower. So for now, we'll just be looking at what is going to happen on US30 as for the moment. So I'll be looking at how US30 is going to be reacting. And so that's that. When you are doing your analysis, first, you will have to go to the monthly time frame or the weekly time frame to see the overall direction of the market. then you'll be trading in that direction, the overall direction of the market. So firstly, you will go to the monthly time frame to see where price is heading, and then to the weekly time frame to plot your key levels, your major key levels, your support and resistance level, your supply and demand zones. So you plot them out on the chart. So those areas are where price is going to be getting a reaction from, either falling from the area or moving higher. This is what is currently happening on US30, and this looks like a double top. So it looks like a double top. That's why I'm saying US30 might wanted to break lower. So this seems like a double top. As you can see, this is the first and this is the second. So, and this was the neckline. So if for this double top to be valid, price will need to break this area, this neckline. So price will need to break below this, the key level, and also this trend line. So after price broke the key levels and the trend line, then broke this broke this low around this region, then start heading lower. So that, and if price can break this low, this confirms this daily double top, and also confirm a trend reversal, because for a trend, if a trend reversal wanted to happen, price will need to break below the previous low. So this was the higher high, this was the equal low, and this was the higher high. So if this trend wanted to be invalid around this region, price will have need to break past this level, break lower, then start heading lower. So if that happens, if price break this trend line, broke this key level, and also broke this neckline around this region, so this will signifies that the trend is changing from an uptrend to a downtrend. So price might start heading lower. So that's how it is. So let me quickly go on EURUSD and show and see what price is currently doing at the moment. So like I said, if you wanted to analyze any pair, if you wanted to do a technical analysis on any pair, you have to go to the monthly time frame to see the overall direction of the market. Though there are people trading on the lower time frame, but the reason why you need to go to the monthly time frame to see the reason why you need to go to the monthly time frame is to see the overview of the market, to see where price is heading overall. So you are going to be trading in the direction of the market. Like, it's going to be easier than trading against the trend. So currently, as we are speaking, price is trending to the downside. As you can see, it's creating lower highs, lower low, lower high, lower low. So it's creating the futures of a downtrend. And so after that, I map out my key levels. So if you wanted to know how to map out your key levels like this, I I teach that on my mentorship program. I do offer a mentorship program. So if you wanted to learn how to map out your key levels accurately like this, so you can DM me. But what I'm currently saying is that after you identify the overall direction of the market on the monthly time frame, then you go down to the weekly time frame. All these key levels are plotted on the key on the weekly time frame, I mean. So you go down to the weekly time frame to plot your key levels. So my levels are already here. I already plotted them. So after that, on the month or after plotting your key levels, you will now go to the daily time frame to see what price is currently doing, to see the immediate trend within the overall trend. So what that means is that we can't really trade the monthly time frame trend, because as you can see, so you can't really trade the monthly time frame trend because the candlesticks are bigger. So each candlesticks represents like a single candlestick form for a month. So it's going to take a while before you can get an opportunity trading on the monthly time frame. But monthly time frame is just for analysis, to know where price is heading. Then go down to the weekly time frame to plot your major key levels and all that. So then on the daily time frame is where you then go to see the immediate trend within the overall trend. So what price is currently doing. So you'll be going down to the monthly time, like the daily time frame, to see the median trend within the overall trend. As for this pair, so this was EURUSD. The price was currently ranging at this region. So price was moving from zone to zone. So these are the guide. So this zone are going to be guide on where price is going to be moving and how price is going to be moving. So as you can see, when price got here, it got rejected back into this area again. Then fall back down. So and then now price has broke out of the range. Let me show you clearly on the weekly time frame. So now price has already broke out of that range. So now the next level target for Euro USD is at this region about 96 740 0.96743. So that's the next level target for Euro USD, but price might not just start heading lower like this because it was in a downtrend. So price needs to retrace before creating an impulsive move. So currently now, after price broke out of this range, I know most people will be selling at this region because they know that it was a price action law that says after price broke out of a range, then wait for a retest before you start looking for a selling opportunity. So yeah, I know that that's still valid, but the reason why I said Euro USD might wanted to head higher a little bit before dropping is this. You know, DXY is the inverse of Euro USD. So DXY, if Euro USD is moving to the downside, that means DXY is moving to the upside. So on the monthly time frame on DXY, price was trending to the upside. And let me then go down to the weekly. Well, I've already plotted my key levels on the weekly time frame and the idea. So what I wanted to talk about is currently DXY is getting rejected from this supply area, from this resistance level. So DXY is getting rejected from this area, and next level target for DXY is this blue zone. And for US DXY to go to this level, it's going to take like quite some time. So price will need to maybe two or even one monthly candle for before price can get into this area. So and if DXY like this, if DXY keeps falling, if DXY keeps retracing like this, then Euro USD will still continue moving higher. So that's why I said Euro USD might wanted to head higher a little bit. And when I plot out my retracement tool, when I bring out my Fibonacci retracement tool, as you can see, so price was lining up with this support level, this demand area right here. So price can tag in, can come back down into this area before it starts heading higher. So this that is what it seems like. So price will have to come back down to this area for every impulsive move. Price will need to create a correction move to create a retracement. So that's what is currently happening on DXY at the moment. So if DXY continue heading lower like this to come and retest this zone before going higher, then there is going to be we are going to be seeing Euro USD going up more furthermore. So it's not safe to be selling Euro USD for now because price might still want to start heading higher. And on Euro USD, if I bring out my retracement tool like this, so price, so I'm expecting for now, what I'm waiting for is for price to come into this zone. So if price can come into this retracement zone inside this 50% and 61.8% Fibonacci zone, then I might be looking for selling opportunity at this region. And by the time this happens, retracement on DXY would have been done. So yes, DXY also will be finding support, like we'll be finding support at that region. So prior seller buyers will be coming in. So there's going to be enough buying pressure, like so the US dollar is going to be heading higher while the Euro USD will be falling. So selling Euro USD at this point might be risky. And as you can see, the candlesticks, the weekly candlesticks are even getting bigger as price was getting to this resistance area, this at the bottom of the range that price retest. When price retest it, as price was going up, this candlestick needs to be getting smaller, but that does not happen. The candlestick keeps getting bigger. So this shows that a lot of buying pressure is still in the market. Price still wanted to head higher. So it's not safe to be selling Euro USD just because it has broken It has broken out of the range, then retesting the bottom of the range right now. So price might wanted to retrace back to the upside little bit before heading lower. And also, I think something like that is happening on GBPUSD on GU. So on the monthly time frame as well, GU was in a downtrend. So this is what GU looks like on the monthly time frame. As you can see, I've already plotted my key levels, and when price got to it, got rejected, and also here too. And so the key levels are accurate. I can see as I plot them. When price got here, price got bounce of it, and also here too. And so all these key levels are going to be guide on where and how price is going to be moving. So then I draw my trend line, and like I said earlier when I started the video, for a trend line to be valid, a trend line needs minimum of 2 touches. So, and the third touch of the trend line is the one that you are going to be using for a trade entry. So this is the first touch, this is the second touch, and here is the third touch. So it say a trade entry would have been somewhere around here, but I'm not going to go into that now. So price was trending to the downside. I was only looking for selling opportunity at this region. I was only looking to sell at this region, and so I was looking to sell at this region, but price was still, when price got to this area, I was expecting price to break this support level, this demand zone. So I was expecting price to break it, then the test, so that I will get into the trade and take my profit at this region. This next, let me map it out. So I was expecting to take profit at this region, but that does not happen. So price keeps heading higher. So on the weekly time frame is where I come to draw my key level. Though I've already plotted my key level, so I can't be start just doing it for now. So I've already plotted my key level. So when price got into it, price starts heading higher, as you can see. So though firstly I was expecting price to break the level, then start heading lower for me to get a sell trade, because price was trending to the downside, but that does not happen. So then I bring out my retracement tool, as you can see. So I'm a trend trader. Like, I trade in the direction of the market on how price is moving. So that's why I'm using this retracement tool to know when a retracement is over and when an impulsive move wanted to start, so that I will get in before the impulsive move start, then ride the wave to the downside. And also there was a resistance level inside the zone. This is more like a supply zone at this region. So what I was waiting for now, though I was expecting price to break lower, but that does not happen. After I see all these bullish engulfing candlesticks forming at this demand area, then I bring out my retracement tool from the top to the bottom where the retracement starts happening. So now I'm expecting price to get into this region, this resistance level region, and then this Fibonacci zone. So if price can get here, then I'll be looking for selling opportunities with candlesticks pattern. So I'll be looking for selling opportunities here. My stop loss will go above this region. Then my first take profit is going to be here, while I will put my overall target at this region. So I'm looking about 1,000 pips drop on EU, like on GBPUSD and on EURUSD. But for that to happen, price needs to create a retracement move first, a correction move before an impulsive move can start. So currently now, if price can retrace to this zone and I start seeing selling pressure coming into the market with candlestick patterns, so I will be looking to enter this trade on the 4-hour time frame. I'll be looking for selling opportunities to the downside. So my first take profit is going to be here, and my overall target is going to be this black line, this black zone around this region. So the another pair that I wanted to talk about, let me so I still wanted to talk about, let me check it out first. Okay, so let me go with this. Let me show an example of it in an uptrend market. I've been talking about Euro USD and GBP USD, which is trending to the downside. So let me show one more example on trend on a bullish trend. So on the monthly time frame, like I said, before you starting your analysis, you go on the monthly time frame to check the overall direction of the market, to check where price is heading to. So now I already know that price is trending to the upside, creating higher high, higher low, higher high, higher low. So this was still an higher high, then this was a higher low around this region. So how I got into this trade is very simple. So on the monthly time frame, like I said, I already identified the trend and price was trending to the upside. So I was only looking for buying opportunity on this trade. And so this was the higher high, higher low. This was the high, but it was not a higher high, but this was just a minor high. So this was the higher low. So this was the last higher low. Then I bring out my retracement to, like I said, I'm a trend trader, so I trend in the direction of the overall trend. So now I do wait after price got into this region. I start seeing selling pressure coming into the market. I start seeing all these red candlesticks that are forming. Then I bring out my retracement to draw from the bottom to the top where the retracement starts happening. So then I was waiting for price to get to tap into this zone, either into this zone or tap into this 50% zone or even lower. When price got here, I then go down to the weekly time frame though. So on the weekly time frame is where I do draw my key levels, and as you can see, my key levels are already here on the weekly time frame. So I plotted this key level with this, with how price reacted from me. So as you can see, when price got here, it was a surprise. When price got here, price moved away from it. Price got rejected away from it significantly, and also here too. Price When price touches it, price starts heading lower. So that's the reason why I draw the levels around this region. So this was the area. Let me draw the Fibonacci retracement tree again. So this was the area of the Fibonacci, as you can see, the 50% Fibonacci area. When price got here, so now this signifies that having price at this Fibonacci area signifies that the retracement is likely to be over. You know, if without it, you can't be sure if price will. So this was, let me show you what I mean. You might not be sure on how price is going to react. Again, this was a support level. There was a support level at this region. So as price was coming down, you might not be sure if price will just got here and then start heading higher. But with the help, because this was still a valid support zone, and if I still draw it like this, let me bring it out like this. So if I draw it like this, so you might be thinking that okay, if price got here, price might start heading higher. So but the reason why I don't know, like, you can't be the reason why I'm not getting confused on where price is going to start and then start moving higher from, or an area where price will go to and then start creating an impulsive move, is that having this Fibonacci level will tell you when a retracement is over. So that's the usefulness of the retracement tool. So it will let you know when the retracement is over. Then if there was a maybe support or resistance level at that region where the Fibonacci levels are, then you can be using it hand in hand to get into a trade. So on this trade, I do enter on the daily time frame because sometimes I don't really like going on a lower time frame, but I do enter my trade on the 4 hour and sometimes maybe on the daily time frame. So I like the daily candles. As you can see, when the daily candles close and engulfing candlesticks. So when price got into this area, price create these bullish engulfing candlesticks. So that signifies that more buyers are coming to the market at this Fibonacci area and this support level. So it signifies that more buyers are in the market and they are overturning, like they overtaking the sellers. So buyers are more than sellers now. So that's when I enter the trade around this region, trading in the direction of the overall trend on the monthly time frame, the overall trend. is to the upside. So I'm just trading in line with the overall trend, and my take profit is going to be this support level based on how price reacted from this area at the past. But I'm not going to go deep on how to draw the key levels now. So if you wanted to learn how to draw that, I do I do teach that on my mentorship program. So what I'm basically saying is that when if you master how to draw your key levels, how to use the retracement tool, and how to do everything, so it will be much easier and you will be able to be catching all these big moves. As you can see, this trade has a 1:8 risk reward. So whatever you are risking on this trade, you'll be making 8% back. Let's say if you are risking 1%, you will be making it 8% back. So whatever you are just risking on this trade, whatever amount you are risking, you'll be making times 8 of it back. So I'm just using a smaller stop loss to catch all this move. So just need to know the overall direction of the market on the higher time frame to see where price is going, and then trade in line with, with that direction on the lower time frame. So basically I don't go lower than the 4-hour time frame for my entry. So because that's the area that you will be finding the candlesticks on the 4-hour time frame and on the 1-hour time frame are more effective than those on the 5, 15 minutes and 5-minute time frame. So that's why I don't like going to the lower time frames. So if let me recap what I've said in this video. So if you are if you wanted to trade any pair, if you wanted to do an analysis, firstly go to the monthly time frame to see the overall direction of the market, the overview of the market, where price is heading to on the higher time frame. After you identify the overall direction of the market, then you will go down to the lower time frame to trade in that direction of the higher time frame. So now price is trending to the upside, so I will only be looking for buying opportunities. Even if price was selling at a particular level, it's just going to be a retracement, and when the retracement is done, then you will get into the trade and sell and buy, I mean. So when you are trading, you'll be trading in the overall direction, in line with the overall direction of the market. So going to the monthly time frame to check how price is moving, how price is reacting. So after that, you then go to the lower time frame to trade in the direction of the overall trend. So let me show you guys one more example on USD card. So as you can see on the monthly time frame, the overall direction of the market is to the upside. So this was the move, and price got to this region, price starts consolidating. So price consolidates at this region for quite some while. I think it took maybe 2 years for this consolidation to be done. So the consolidation starts at around September 2022. So the range, the price went into a range like at this like on September 2022, and price broke out on December 2024. So the range took about 2 years, but price broke out of the range, and for every impulsive move, price need to create a retracement. So that is what is currently happening on USD card at the moment. When price broke out of this region, price does not retest it. Price just broke out, then starts heading higher. So on the weekly time frame, you can see that. So and there was I've drawn my trend line. As you can see, like I said earlier, for a trend line to be valid, it needs to have minimum of 2 touch. So this is the first touch, and also this is the second touch of the trend line. And this was a chart pattern. This was a double bottom at this region. So this was the first move, and this was the second. So this was the double bottom, and this was the neckline of the double bottom around this region. So this was the neckline of the double bottom. So when price broke out, price broke out, then start creating all these bullish candlesticks. So after I see that price is now start to retrace, price is pulling back. So then I then bring out my retracement tool, like draw it from the swing low, from the recent low to the swing high, that caused the retracement. So this is where price got to and then start getting rejection from the start heading lower. So now I'm expecting USD card to come into the zone, price to come into this Fibonacci 61.8 Fibonacci level. Then I'll be looking for buying opportunities. And the reason why I say that is that this was a double top and this was the neckline. And price action state that for a after price broke out of a chart pattern, let's say a double top, a double bottom, or a then like a reversal pattern, maybe head and shoulder like that. So after price broke out, price will need to come into the zone to retest it before heading higher. So this was an impulsive move. Then the retracement move starts happening. So now I'm expecting price to come back to the neckline of this double bottom, then start heading higher. So if price can get into this Fibonacci level and also this support area, and also known as the neckline of this double bottom, so I'll be looking for buying opportunities at this region. And also this align with what DXY is doing, like I said earlier. So DXY and this USD card is almost the same thing. They move in almost the same direction because they are USD pairs, the USD based pairs. So this DXY is the index of the US dollar, is the US dollar, basically the US dollar. And also this USD card, so as you can see, USD is the base pair. So the US dollar pairs, the base pair, they are currently retracing to the downside for a retracement now. So if what I'm just waiting for is price to retrace into the zone, and by that time the retracement on the DXY would have been done. So then I will just be looking for buying opportunities with candlestick confirmation around this region. And so I think that's for today's video. So to for more videos like this, please subscribe to the channel and like, so that it will give me encouragement to start to be making more videos like this. So and so that's that. Subscribe to the channel, like and share for more videos like this. So maybe next I'll be talking about BTC. And let me quickly recap. Let me quickly show you what is currently happening on BTC at the moment. So BTC, so the Bitcoin was trending to the upside. As you can see, BTC was moving higher. So on the weekly time frame, on the monthly time frame, the weekly time frame, the trend is to the upside, but price got into this area and then start retreat, like start moving from zone to zone. We also call it a consolidation at this region. So on the daily time frame, things start get interesting. So at this region, so this I've already mapped out my key levels. I'm not going to go into deep on how I do that, but the overall direction of Bitcoin is to the upside. However, the immediate trend, the trend that was just forming now, is a downtrend. So price was moving to the downside. Then I bring out my retracement tool from the top here to the bottom where the retracement starts happening. So there is how it is on Bitcoin. Let me delete all this first. So okay, so price, so like I said, the retracement that was happening here, the move that was happening here was to the downside. It was creating lower high, lower low. So this was the lower high, and I was expecting a lower low to this region, to this major support level. So after having price at this area, at this Fibonacci level, at this 50 and 61.8 Fibonacci level, and at this key level, so I was already looking for buying opportunities when price got into this zone, when price tagged into this zone. So I was already looking to buy. Sorry, shit. I was already looking to sell at this region. So when price come into the zone, I then head to the 4-hour time frame for and more confirmation. And getting down to the 4-hour time frame, I realized that there was a trend line at this region. So there was a trend line at this region. And like I said, for a trend line to be valid, it needs to have minimum of 2 touches, and the third touch is going to be the one that you'll be using for a trade entry. So the third touch of the trend line is going to be the one for a trade entry. So this is the first touch, and this was the second touch at this region. So this third touch is the one I'm looking like for a selling opportunity, and this was an area that price got to the Fibonacci retracement area. So this was the area right here. Good. So when price got into this 1.8% Fibonacci retracement zone, so and start forming all these red candles, I was already looking to sell. So I have enough confirmation to sell BTC at this region. Though I know Bitcoin was more of fundamental analysis, but if you can still use technical analysis very well, if you are good in technical analysis very well, you can still be using technical analysis to analyze Bitcoin and also be making money from it. Though it was more of a fundamental and sentimental analysis, but if you are really good with your technical analysis, you can still be using technical analysis and also in combination with fundamental analysis on Bitcoin. So back to what I'm saying. So price getting into this resistance area was was the first confirmation for me to enter a sell position, because price broke out of this zone, then retrace it. So I know that it's possible for price to get rejected from it. And also when price go out into this Fibonacci zone, so there it was a retracement area. So I know that the retracement is done at this region, and also price was still at a supply level, so I was already looking for a selling opportunity, and also having this trend line as well. So let me delete this Fibonacci zone. So having this trend line touching, getting rejected, having price getting rejected from the trend line was another confirmation for me to enter a sell trade. So I entered this trade on the 4 hour time frame. On the 1 hour time frame. So I use the 4 hour and the 1 hour time frame for my entry. So on price, so there was a counter trend line around there, a little trend line where the price was respecting when price was retracing back to the upside. So I then wait for price to break this counter trend line. So this was a counter trend line. Having after price starts rejecting from this area, from this trend line, supply zone, and also the Fibonacci area. So after having other three confirmation, then I go to the 1 hour time frame to look for my entry. So after this counter trend line, after it breaks, then I enter a sell position at this region at the 1 hour candle that break there. So that's where I enter a sell position, and my stop loss go above. So my stop loss go above this level. So I put my stop loss above this resistance level, and then my take profit was at this next major support level. So my take profit was was at this region. So and my first level target, my first take profit is going to be this region. So when price got to this area, I would have already moved my stop loss to break even and also take out a portion of my trade. So I will close some of my position, then wait for price to break this black line, then come into the zone. So that's how you can also be using technical analysis for cryptocurrencies like Bitcoin. So you just be using the fundamental aspect as well, the fundamental aspects and also the sentimental. So you can also be using technical analysis for Bitcoin and also other cryptocurrency pairs if you really have a good technical skill. So that's that on this video. So don't forget to like, subscribe, and share these videos so that it will keeps encouraging me to be making videos like this. So and also if there was peers like you guys want tell me to talk about a particular pair maybe that's acting somehow like you, if you are not getting it right, so just let me know. I will find a way to do that. So bye guys, don't forget like, subscribe, and share this video. Bye.